So it's an absolute pleasure to be here, but more than that, to have both Maarten and Isaak here with us. So what we'd like to do over the next half hour is just hear the heart and the truth behind the scenes of what goes on at both the CMO level and the CEO level. And we again are really grateful to have two representatives to share that perspective with us today. Just to give you a brief intro on the two services that you see in front of you, because we haven't allowed them to make long presentations about their mobile money deployments. Choo in Haiti is, did I pronounce it correctly? Chocho, sorry, apologies. It's TCHO, Chocho. It is a service that launched in early 2010. It is has ability to do bill pay. It also has the ability to do cash transfers, so they look at projects whereby the government can pay out subsidies to individuals in Haiti, which is quite important, obviously, for that country. There are more than 500,000 registered users on the Digicel network using this product. And just to give you an example of where Digicel sits in the market, they have about 68% market share with 3.5 million GSM connections. So that's a brief overview. And over to Uganda, in that very fertile East African region, as we saw with mobile money. The MTN Uganda service, first as a GSM business, sits on nearly 8 million connections with just over 50% of the market share. And more excitingly, when it comes to mobile money, there are now 2.5 million Ugandans using MTN Uganda's service and moving about 14 million transactions a month. Which is quite astonishing figures for a relatively young service. Launching in 2009, also offers bill pay additional to airtime top-up, P2P, and has recently launched things like paying of school fees. So now I'm going to turn it over and kick off the question of why did you launch mobile money? What was the business rationale at the time of launch from the C-level perspective?
Like all operators, for us, a couple of big objectives that we wanted to achieve with mobile money. One of them was churn. East Africa sits on average about 60% of the base churns out every year. So you lose more than half your customers every single year. And in there goes your SIM subsidy, your cost of acquisition, and really a big wastage issue. And we figured out that perhaps if people had more than an address, if they had their money on a SIM card, it should make the decision to move a lot harder. And we have, obviously proven that that was the case. So we wanted to deal with churn in a big way. We also, in a market where differentiation is very, very hard, it's a small place. It's in terms of the population, 34 million people, half of them below 15 years, about 20% below the poverty line. So really addressable market is small, and there's 6 operators. And we had at that time about 65% market share. So, and there were many people still coming, so we figured out that a lot of the issues we're going to deal with was about differentiation. So, and we wanted to be early in with a significant differentiator. So that we could actually make our services, more appealing. But more than that as well, we saw the revenue stream. We had a fairly realistic expectation. We wanted to, over 3 years, achieve about 5% revenue diversification for mobile money, which we achieved by 18 months. We were there. So a combination of revenue stream, interests, churn, big on churn, and differentiation really as a market leader. And that combination made it extremely important for us to go into mobile money.
Thank you. Luckily, we don't have a big churn issue like you do. So we have about 20% annual churn, 24% annual churn. So our main reason for launching the service was because there was an opportunity for this. Haiti has about 90% of the population which is unbanked. We saw this as a way to sell new services to our customers. As we said, we have about 70% market share in the mobile business, and we wanted to do the same in the banking business. That was about 2 years ago when we didn't know how difficult it was to actually launch this product. The additional reasons were that after the earthquake, a lot of NGOs came into Haiti to work in various areas, be it cash for work programs, be it subsidies for getting people back into housing, etc. And there was an opportunity there as well. There's actually quite a lot of demand from the NGOs towards us to say, listen, we want something, we want an easier way to transfer money to these beneficiaries rather than going out with trucks or with checks and giving it out to them that way. So again, that was the other business opportunity we saw. Now, 2 years later, roughly 2 years later, we're finding it extremely challenging. I'm finding it challenging to maintain the focus from our board on this product. The team reporting to me finds it challenging to deal with my pressure as well, because they've obviously got and promised quite an aggressive business plan, and in reality, it's proving to be quite different. Now, that doesn't mean we give up. It's actually the comfort and the luxury we have with our shareholders as well, is that they've understood that this is quite a new business, that this is where there needs to be space for experimentation. We've been helped a lot as well by the Gates Foundation. They did a competition in Haiti for $10 million with the First to Market award, and then several scaling awards, which helped us sort of fund the business, or part of the costs we had put into the business. So I'm still quite optimistic about it, and I think that slowly we're beginning to understand which part of the product lines people are using, which product lines work in Haiti. We're still tuning and playing with our commission structures, with our pricing structures as well. And as we go ahead, we come across little gold mines, let's put it that way, and little opportunities where we see that we can go and keep going forward.
That's great. So we've heard very clear business objectives around both the launch of mobile money in the case of Uganda, much more focused on churn, but also seeing the opportunity of generating real revenues, and in the case of Haiti, really seeing that opportunity for the unbanked, with the hope of also generating those revenues. Of course, now we're hearing mixed results, with Isaak saying we hit that revenue target within 18 months, and Maarten saying it's been really tough. One of the things that we know is that mobile money does require a lot of resources. That's financial commitment as well as human resources. What are the battles that take place at the C-level to decide how to allocate those resources, and what is mobile money competing with?
The first difficult part is to find the right people to lead the business, actually, because it's a relatively new business. So you sort of hesitate between taking someone from the mobile world or taking someone from the banking services world. They're quite different worlds. They move at a different speed. They have different returns as well. So our initial experiment was with someone from the banking world. Unfortunately, he couldn't really keep up with the pace, or we're expecting the pace we were expecting from him to keep up with. So that's been a challenge. But after, as I said, after 1 or 2 tries, we did end up with someone relatively good and who's now leading the service pretty well. From a business perspective, from a focus, it represents currently less than 2% of our revenues. So it is not a key focus, unfortunately. What we've tried to do is to have a separate business unit with a separate P&L. That does work. What happened, though, is that there was lack of integration with the existing core business in terms of using our existing sales channels, our marketing power, combining the mobile money product with existing events we do for the GSM service. So again, that's something after this, a few cycles of learning and moving forward, we've now integrated that back in. So yes, it is, and it will be, I think, for many operators, a key challenge to get the right budget for it, to get the right human resources for it, to keep the focus on it, given the small importance in terms of revenues. And I think if you manage your shareholders well, or if you manage your board well, it's actually they will understand the long-term benefits. And if you set the expectations right and don't promise heaven or don't promise things which are not attainable, you will actually get you'll keep that focus on there, and you'll be able to keep your product running over time.
Yeah, I think for us one of the big lessons we've learned is to leave money on the table. Extremely difficult. If you're in business, to leave money on the table is really the way that you do mobile money, if you like. Right from the product design, if you cut corners on who you work with, in our case, we hired a consultant to sort of design the product, to do a global benchmark, do the research. We over-invested with hindsight. We perhaps paid a premium, but we went for the very best in the world in terms of constructing the product design. And when it came to resourcing, which is really the big resources was always about the people. So this is a product we designed to have about 5% of revenue in 3 years, and yet we gave it 10% of our headcount. You know, it's a serious mismatch, and for the board, I think it's quite a difficult case to make. But you have to leave money on the table across the value chain to get it right. So, you know, you design it poorly, you actually, you know, you start in the wrong direction. You deny it your best people, or you deny it, you know, we've got 10% of our workforce and the product is giving you less than 1%, difficult sell. You go to the channel. I mean, I think Albert made the point. The channel is a bunch of entrepreneurs. If you don't attract capital, you know, you'll have all sorts of issues. You've got poor agent quality, you'll run out of stock of, you know, float, and the whole product fails because it's about, just imagine going to your bank, sign, you know, write a check, and there is no cash. So you have to attract capital, and to attract capital, you pay slightly more than you think is adequate. So we pay 70% of our revenue back to the channel. And that, you know, we've got a queue. I mean, on average, we will have, you know, about 500 applications of entrepreneurs who want to become agents. So we're sitting now at 8,000 agents in a country. Our view would be to get to about 20,000 in a year's time. But we are attracting a lot of capital. You know, we perhaps the #1 destination for capital from entrepreneurs, micro-entrepreneurs. And then on marketing, we, again, you know, it contributes now 6%. I give the product about 15% of marketing OpEx. So I think in the early years, we're clear that it's a product that you have to be a bit irrational when you make the investments. Obviously, not in the long term. We watch it's got its own P&L. We watch it, but over time, we build efficiencies, but we allow fat in the beginning to be able to take off. So really, for us, and these are the real battles. I mean, you can imagine a product that gives you 6%, you give it 15% OpEx. You know, 5%, and you give it 10% of headcount. These are very difficult choices to make.
And how were those battles won, and why were they won for mobile money and not for data or for other products? What was the motivation that the management or board team kept thinking to continue to allocate or over-allocate resources against incoming revenues?
I mean, our business case really hangs on two things. It's churn. You know, if we could bring that churn to less than 30% a year, you know, the board would love that. So we promised. We put our carriers on the table and said we will give you less than 30% on those mobile money customers. A very strong selling message. And I think we also saw the opportunity to save on cost of distributing airtime. You know, it's a big number. I mean, if we're saving about 8% of top line. And when you add those two, you know, we had a very strong case. And on both the numbers, you know, our churn on mobile money now is less than 20% in a market of 60. So clearly, you know, I think it's being very clear, single-minded, and having a strong proposition. Risk your career as well, because it's not, what if the churn came out at 50?
So you nodding vigorously, Maarten, when Isaak was talking about needing to invest and sometimes over-invest. What was the experience on your side?
Well, I think that was a challenge, and that was one of the mistakes we made. Is the lack of investment in the beginning. One of the big challenges we find in Haiti is customer education, which is obviously linked to the product line as well, or the product offering we have at the time of launch. But basically, for someone in Haiti to understand the value of a transaction or the cost of a transaction when he does it manually, when he waits in a line for getting his international remittances, or when he waits or takes a tap-tap, which is our local minibuses to go to the market and buy goods or sell goods, is that he doesn't understand how much that costs, because it's time, and that's something people have there. They have a lot of time. So getting that across is the biggest challenge. We've been working on that a lot to try and get the education going. And we see when we go into communities and we do community workshops and we work closely with community leaders in explaining that we actually see it picking up quite well. We see also that when we're working more and more with women organizations now. They seem to somehow understand it a bit better than men do in Haiti. And that is also helping us drive some of the usage and drive it forward. I was nodding my head because I was saying it is a career risk to commit on some of those things, but it's a risk worth taking because I honestly believe that it's a product if you get it right, and every country is very specific. If you get it right and if you put the right effort behind it and throw the right resources at it, like you seem to have done in Uganda, you can have a great success. And we're beginning to see that success as well now in specific product lines.
I think both of you alluded to the organizational structure as being quite key, and I think actually, from what I know, there's some synergies in the way you have designed the org structure at your respective organizations. Walk us through how you did it at launch and how you've had to evolve it since then. And that is, of course, something where the C-level team is making big decisions. So if you can share with our attendees what your perspective was on the initial design of your team and how you've had to evolve it today.
Our philosophy on designing the organizational structure was obviously, to have at the front line, enough resources, the best people, from a sales, distribution, customer acquisition. I mean, ours is on the SIM toolkit. So there's involvement of every customer has to swap a SIM. And there's a lot of work. So it's a one-on-one, frontline work, hard work. So there we put a lot of our best people and, substantially a bit of fat there. So we put, people on the road. In the rest of the organization, we kept the organization unchanged. So product development is done under marketing. Marketing communication is done under marketing. Custom operations, we took off in terms of the call center. We ring-fenced the helpline and put a lot more people on the call center to actually support the field team. And then on the IT and on the application side, we dedicated 2 people to look after just this application. And in the early days, we kept really struggling to justify and to be comfortable that we had not made a lot of mistakes in terms of allocating resources, because when you don't have a base, all those people seem redundant. And it's so tempting to actually pull them back to where they were. But we kept our faith and kept them there until they got fully employed, and now we're putting more people.
Well done. We started off with a separate organization. So we created a separate business unit. This was based on some benchmarks we did around the world. The advantage of that was that there was quite a lot of focus in that team. The big disadvantage was that they were beginning to duplicate work which was being done by the GSM organization. I said it earlier on, but that was the biggest challenge we had. And the sales director, the existing sales director on GSM, the marketing director, etc., wouldn't see it as their key deliverable. They had other priorities, and that was also somehow my mistake in terms of giving them those priorities and those KPIs from day one to make sure that they understood it, that it's part of their KPIs to get a number of registered users, the revenues as well, etc., etc. Now we managed to change that around quite quickly, and since then we've seen the registered users picking up, our marketing budget on the MFS project actually going down because the GSM marketing budget could take that on board. But you still need that focus from someone who's like a general manager or a GM for MFS. You can't integrate it purely into your GSM organization. You can't make it just a product line or head of products for MFS. At least that's our experience, is that you need someone very senior and who can defend it and who can drive it forward using or let's say contracting or subcontracting some of that work he needs for MFS to the GSM organization. Another thing which is interesting, which we did, is we worked with our partner. Actually, does a lot of the agent management. So, contrary to some of the other metrics, we've done pretty well there. We've got over 1,000 registered agents, of which more than 500 transact on a very regular basis. It's very important to it's not one thing just to have number of agents, but it's very important to have agents who have regular transactions, because if not, they lose the training, they lose the value or the reason for promoting the product. And people can walk into an agent and then the guy doesn't even know how to transfer money or cash in or cash out. So that's another thing which worked pretty well, using a partner or externalizing the agent management, and it gives you, it gives them key focus. You have, obviously, as you have a contract with them, you have SLAs and measurements with them which you can drive them on and keep it going forward.
Other than the organizational structure, which is what we've just touched on, if I can take you back sort of 2.5 years when you were launching, are there things today that you realize that you should have perhaps done differently, or that you would like to have done differently, whether it be product design, whether it be the way the service was launched, whether it be marketing strategy, whether it be the partners you worked with? When you look back at the launch, where have been the lessons learned as of standing in the present?
I think that's a great question. I think for us, once we saw the signs of success, we got totally absorbed into the execution, perfecting execution at the front line, registering customers, getting them to be active, which is great. And I think as you ride that wave, just remember in our case, there are still a lot of strategic questions as you grow. So managing growth, from a strategic perspective, I mean, one of the things that we now have, realized we should be looking at a lot more is the back office operations. In terms of all the reconciliations, all the cleaning up on KYC, testing the product end to end regularly. So a lot of and also adjusting your structure so that it actually keeps with the times, keeps with the volumes. And also keeping an eye on, the service evolution, because in many respects we've been led by customers when we should have been the other way around to evolve, services. So the services that we haven't launched yet, that the market is in dire need of. And again, it becomes clear now with hindsight that, a certain part of the organization needs to have on the table regularly the strategic questions flagged and discussed and concluded around structure and product.
I think our main lesson learned is how difficult it is to educate customers. I think when we launched the service, we assumed it would be something like selling a mobile phone, where you stick a phone into someone's hand and the guy, almost anybody can start using it quite quickly because it's very easy to understand. With a mobile banking service or mobile money service, it is not that easy. As I said, you have to explain a series of benefits behind the product, just the benefits, and even the trust that if you give money to someone and it ends up somewhere in the air, which for many people is difficult to understand, is key. So that's one of them. Another lesson is not to launch too early. I spoke about the Gates Foundation competition, which was good for us, but at the same time it put a lot of pressure as well in terms of reaching a deadline very fast, which meant that we rushed the launch a bit and mainly in terms of the product suite we have available at launch. Because obviously, if you don't have a product suite available and you only have cash in, cash out, peer-to-peer, and maybe some airtime purchase, the benefits for the users are a lot less visible than they would be if you had a full merchant network built out, or if you had bill payments, or if you had cash for work and other benefits already adapted to the product. So, and take your time, get the right resources. You did very well on that. Another thing is don't, as in the beginning, the agent network is not that busy. They don't actually make, in our case, they don't actually make that much money of it. It's a 50-50 revenue share. I think the idea you just brought forward of having 70-30 is actually quite good, because it will stimulate your agent network to actually subscribe and promote the product as well, rather than just having a very small margin out of it on a regular basis. So that would be another key lesson for us.
While you have the mic, both of you have talked about sort of needing to risk your careers, but also the challenge that these products do take their time and can be complex. If you were talking to other C-level executives, what is the time frame that one should think about to achieve success or some measure of success when it comes to mobile money? How long should they be prepared to wait for that?
Well, I think that was shown in the numbers as well, you have to try and drive scale very quickly. So, but at the same time, you have to set expectations to your board that it's not because you get scale that you get, your payback and your revenues and as quickly as that. But without scale, it's a dead-born child. You know, you don't even, whatever you throw in afterwards, it's going to stay negative, the returns. So I would say, to do it properly, I would say 6 to 12 months, and 6 months is very aggressive. Honestly, you want to have a proper market research, you want to understand what's going on in the market, you want to do a lot of focus groups with people, you want to understand what are their challenges, what are their questions. The commission structure and the pricing structure is also a complex matter. They're obviously interlinked, and they will drive your usage over time. You want to take some risks in there as well, and be quite aggressive to get people on board and to get adoption. And then once you get adoption, I think you can restructure pricing and things over time.
I think the other, so 6 to, I'd say 18 months. You'd be realistic. One of the things that we didn't think about adequately. We did obviously plan for it, is capacity management. This product can run away quickly. So in 1 month we were seeing 1.5 transactions per customer, and we launched payment for water, and it went to 6 transactions. And you can imagine how quickly, how many of your organizations can turn their capacity around like that. That's a very, very big issue. I mean, that definitely from your vendor and your IT and network department, you really need to keep them very, very close. It's so easy for the CTO to, not see their role in this as much as they would see in a normal service. So that's a big issue, keeping an eye on capacity, end to end. I think the other big issue that obviously comes, wherever there's money, there will be fraud. And the market and your staff are smarter than any design. So one of the things that we definitely have now come to terms with is your BRM, your business risk department. You need to leave money on the table, have a lot more risk people than you ordinarily would have as a GSM operator, and get people to actually be able to play with it, and so you should be able to be the first one to see the loopholes in the system. One particular channel that we have found extremely challenging to keep an eye on is a web. The web channel is extremely, extremely vulnerable to fraud.
So many challenges have come up, and of course we don't have time to talk about all of them. But I'll pressure you even further, if I can, to give me your most difficult challenge that mobile money poses to a CEO or to a CMO. So you obviously all manage quite a complex web of products that are constantly in the market. But mobile money in of itself, what is the greatest challenge that it poses to a CEO or to a CMO?
I think I've said it before, but it's the speed at which the service adoption happens, and the irrational. I think Isaak put it very well. The irrationality between the amount of money you have to put in to get it working and the returns you get on the short term. So you really have to defend. I mean, typically mobile operators, and at least in Digicel's case, it's the case. We don't invest in anything where we don't get a return within 18 months. Okay, and the type of returns we're looking at for this business are more in the 4 or 5 year horizon. Obviously, with probably much more healthy returns in time and indirect returns like churn reduction, like service differentiation as the market gets more competitive. But you have to really, really set expectations there. So that's the biggest challenge, is to not overpromise and to really make it understand, using benchmarks, using other successful or less successful operations to get it across to your board. If not, the pressure just keeps increasing, and you start making mistakes or ramping back on OpEx when you shouldn't be ramping back.
What about in the marketing department? Has mobile money posed unique challenges as a CMO?
I think in the end, it comes down to the resource allocation issue. Typically in a marketing department, you have a medium-sized operator like ourselves, 3, 4 product people, who are busy designing, looking after the whole new roadmap, 10 products, and they have to look after the existing products. So they're very busy. Getting even one of those 3 to actually just be a mobile money, product person is difficult. But I think the bigger one is obviously, when you have a product that you believe in, giving it a lot more money than it deserves in the beginning. That's a lot more difficult. I mean, at some point I was spending about the same amount of money on mobile money as I was spending on the mother brand. I think in 2010, when we had the World Cup. So that was very difficult to justify to myself, to my colleagues, and to my team.
Well, this has been incredibly interesting, and I'll conclude with one final question. Today we have many mobile money managers, so heads of their own business units, and of course when they go back to their deployments they have to come into offices like where you sit and pitch for additional resources or additional capacity. What advice, if any, might you give to mobile money line managers when dealing with the C-level team to secure the resources that they need to make this product a success?
Just don't give up. It's the simple thing. Just keep pushing. I mean, it is. Isaak said it right. It is a thing about believing in what you defend, and it will be difficult to prove it with numbers on the short term. So you really have to persevere and insist. And if you have a market with high churn, insist on the churn. Insist on the collateral benefits of having the products out there. And then also look out at some of the new things happening in the world. I mean, there's more and more microinsurance. The conditional cash transfers are picking up quite a lot in Latin America. I don't know if it's the same in Africa, from government, social payments. All these opportunities are, even if they're not entirely, mobile money, they do help your business case. They do help drive uptake. So you got to persevere, and you got to just, say, well, if you don't want to do it, then fire me, basically.
I think from an operational point of view, I think it's important that the person asking for the resources has credibility. So there is, you've been successful about, in the early days, because obviously we're banking on you, we're putting our money on you. So if you say, we want to take penetration from 10% to 30% in the next 6 months, if in the past all the projects you've handled, nothing came to what you promised, that's extremely difficult. But having said that, we've approached the product as in a very generous way, an unusually generous way. Obviously, the numbers must stack up. So I'm not going to spend $10 million to move penetration from 10 to 12. So it must make commercial sense.
That's great. Well, I thank you both so much, and from hearing the perspective of Haiti, where we have sort of 500,000 registered customers, looking at very interesting new product designs, and where we go over to Uganda and hear from the 2.5 million customers there who are pushing all these transactions through your pipes. We wish you both much continued success, and we wish the mobile money deployments much continued investment. And thanks so much for sharing your perspective today.
Thank you.